Credit score, the all powerful number that determines a lot of what you can do with your money. And yet, half of college students aren't checking their credit reports, according to creditcards.com. However, did you know that credit score has a bigger impact on college students than you think?
Fortunately, I have some knowledge on credit scores and how they affect college students. But tell you what, I can guarantee you that a lot of our fellow classmates and peers have no knowledge about the meaning of a credit score. Let's talk about it.
Welcome to Educashional,
Education.
Educashional,
Educashional.
a podcast for college students by college students about the basics of finance and how to survive in a world where money controls our lives.
We are your hosts, Osheen and Evan. What we're talking about today is credit score.
Credit score is a number assigned to people that basically evaluates how likely you are to return your loans.
Why does this matter to us college students?
Credit score has a much bigger impact on us than we think, and if we start building our credit now, it'll help us a ton in the future.
Evan, you just stated that a good credit score will help us a ton in the future. How exactly will it help us? When will I need a good credit score? What is it useful for?
Well, to say the least, a good credit score will help you in many different situations. For example, whether you need to take out a loan to purchase a car, a credit card with good benefits, or just to buy the home of your dreams, you'll need a good credit score.
We personally wanted to know more about credit score because we always hear about it and how it is so important to living a good life. A good credit score will also relieve a lot of stress in the future, and you will have to worry much less for your loans.
And yet, we don't really know much about it. We also want to know more about what we can do to help our credit score now.
What we specifically went out to discover was actually how credit score impacts college students now, since this podcast is by and for college students.
We've interviewed lots of people with experience and knowledge in economics and finance.
Hopefully, by the end of this episode, you will know what exactly credit score is and what you can do now to raise it.
Let's start off with defining what credit score is.
A credit score is a number assigned to a person that indicates their capacity to repay a loan, which is determined from three major credit bureaus: Equifax, TransUnion, and Experian.
Credit score is built up or reduced over time through lots of ways. The biggest and most common factor is credit card payments. When credit card bills are paid on time, the owner's credit score is raised. And here's our first tip: make sure to pay your credit card bills on time.
According to Rod Griffin, a credit expert who works for Experian, stated that the number one way to increase your credit score is to pay your bills on time. People don't realize how much of an impact late payment records have on one's credit report. Paying balances on time and in full really increase your credit score. Here we have Dr. Kevin Sanford, a professor of business and statistics at PCC, an expert, explaining more.
Because currently, especially as you start out in the financial world, you don't have anything to go on. So basically, as you do anything negative at all, it has a negative impact on your credit score. One of the important things that I recommend to students is that once they've created or opened a bank account, and then from there that they have established a credit card account, no matter what small or like the small limit, that they go from there to make sure that if they do have a rotating balance for every month, that they do pay that on time. Because anytime you don't pay it on time or you skip it or you forget, that decreases your credit score. So
The second way of increasing your credit score is by keeping revolving balances low. What does that mean? Well, for example, if you have a credit card with a credit limit of $1,000 and at the end of the month you have a balance of $1,000 and make a payment of only $100, your credit usage is at 90% because you are carrying a balance of $900.
So, what you want to do is pay your balances in full, or at least carry over the minimum amount possible. You want to pay your credit card bill off in full as much as possible to increase your score. Generally, a credit usage percentage of 30% or lower is considered good, but anything lower is even better.
If you want to learn more about credit cards, check out our other educational episode on credit cards right here. However, credit cards aren't the only thing that impacts your credit score. According to Experian, one of the three major credit bureaus, utility, cable, and phone bills also impact your credit score, which is something that most people aren't aware of.
Credit cards and loan payments aren't the only things that impact your score, and it is very important to pay those bills on time too. Paying these regular bills late will cause a decrease in your credit score and will be on your record for several years.
Here we have Jay, an accountant with a degree in finance, to explain an uncommonly known way on how credit score is impacted.
When you open a new credit card or have a new loan, your credit score will go down initially, but you can raise it back up by using the credit card and paying it off in a timely manner.
We'll be right back after a short message from our sponsors, College One.
Hey Osheen,
What's up?
did you want to hear about someone who dealt with student debt, started and provided for a family, all while managing to pay her credit card balances?
Heck yeah!
Jane Bird, a doctor from Philadelphia, accumulated a lot of debt from medical school. She reduced her student loan debt, and just recently, her credit score increased to 847 out of 850. She manages paying her student loan payments, credit card bills, family expenses, housing expenses, etc., all at once.
Wow!
It may seem like a lot to worry about, but if it is done correctly and with good accounting skills, it sure won't be a problem. Do you want to hear more about what Dr. Bird had to say about raising your credit score?
Sure, let's hear it.
The first thing is to fix any errors on your credit report. Check your credit report frequently and look out for mistakes and any errors. Keep your financial relationships in good standing. This means paying bills on time and in full if possible. Don't push to the limit.
This means don't fill up all your credit cards to the point where you can't pay them off. Only spend what you can pay off. Keep your lines open. The more lines you have that are open on your credit, the higher your score will be.
Give me more.
Understand your benefits. Having a near perfect or good credit score will give you access to lower loan rates, better terms, and a more stress-free life, of course. Lastly, know the debt hierarchy.
The heck is that?
Well, let me explain. Credit card debt is considered a bad type of debt, while a student loan or mortgage loan is considered a good type of debt because it is giving you an asset in return, like education. So credit card debt is one of the worst types of debt to have.
But wait, we're not done. What's the most important thing for making sure you can pay your bills on time?
Have savings. It is always good to have savings. In case you're ever in an emergency or you just invested in something big, your savings will be there to back you up.
Here we have an anonymous person who is willing to share any tips she has learned from her past experiences with credit score.
What would you say is the most difficult part of keeping your credit score high?
I would say that the most difficult part is managing to pay all credit card balances in full while managing to pay other regular bills. It's important to not overcharge and have good accounting skills and not to spend all the credit limit on the credit cards. So to know how much you spend and to be able to pay it off at the end of the month.
What are some tips you would give to college students who are new to credit cards and credit score?
I would say start small, know what you're committing to, pay your bills on time to raise your score, frequently check your credit score and report. Look out for any mistakes on your credit card bills and consistency pay your credit card balances in full so you don't accumulate interest. You'll soon benefit from it by receiving lots of rewards from credit card companies.
Wow, I think that was a great summary of what we learned so far. So with that, let's recap. So let's recap. What is credit score and how is it determined?
Credit score is a number assigned to people who have bank accounts and credit cards. They determine the likelihood of the person returning a loan on time. Credit score is determined by a plethora of things, but the most important of them are paying your bills on time. Not just your credit card bills, but every single bill.
After that, make sure to keep revolving balances low and if possible to pay every balance in full. We have heard from both people who work in the finance industry and people who have dramatically raised their credit score.
Each person has given us a small tip on raising our credit score. Lastly, make sure to start raising now. Here's Jay on why you should start worrying about your credit score now.
And so when you have a good credit score, you have lower rates. And so it means that you basically borrow the money you need and pay it back less than if you had a bad credit score. Basically, if you have a bad credit score, you pay more. If you don't, you pay less.
Yes, he's absolutely right. If you ever need to buy a car or start renting a home right out of college, a good credit score will be there for you, helping you get the loans you need with low rates. And not only that, but as Jay said, good credit scores help you get good jobs.
Thank you for listening today. We hope you are now empowered to start raising your credit score. For more financial literacy topics, check out our other educational episodes right here. See you next time.
Educashional is a production by College One students at Pasadena City College.